Hello and welcome to another insightful video from Wealth Bridge, your bridge to creating generational wealth. This is a knowledge sharing session about an interesting book, The Margin of Safety by Seth Klarman. We have read the book and derived 10 powerful lessons about value investing. This is a very famous book and very costly. So, we have got some great lessons for you, and you don't need to read it. Let's dive in. Lesson number one. The phrase don't lose money, which is often used in the markets by various market participants, doesn't mean you can plan never to lose money or cannot make loss making investments. Losses happen in investing, but the goal is to prevent one huge loss from wiping out years of gains and a big part of your portfolio, which is your capital. Lesson number two. First, no matter how much you look into the company, some details are always missing. Investors must accept incomplete information as the basis for decision making. Second, even if they knew everything, it doesn't guarantee a profit. So never be too sure and don't hesitate to take bets based on sound decision making skills. Lesson number three. Speculators spend lots of time guessing stock prices, relying methods such as technical analysis and its various tools. Constant predictions on TV, media, market reports, and publications have also become very common. The truth is, nobody knows what the market will do tomorrow and next. Investing based on predictions is speculative as well as counterproductive. Lesson number four. Don't assume that setting a goal for returns can guarantee success in investing. It is not linear and cannot be planned to the T. Working harder or wishing for higher returns won't help much as well. Instead, focus on a disciplined and rigorous approach over time. Target managing risk, not just a specific rate of return. Lesson number five. Smart investing means entry at the opportune price. But trading just to trade for a target gain is a waste of research and efforts. Remember, investing is usually a win win, but daily trades or short term trades often result in zero sum outcomes. Someone gains, someone loses. Be wise and disciplined for achieving investing objectives and the power of compounding. People who failed at investing often let their feelings control them, acting out of raw emotions of greed or fear, instead of calmly reacting to market volatility with data analytics and understanding of patterns. This is lesson number six, that you shouldn't see stocks as easy money and have a smart way to grow your savings. Lesson number seven. Predicting the market's future is tough and prone to errors and mistakes. In the rising markets, value investing can be a drawback as unpopular stocks may not rise much. It's worse when the market is overvalued because value investing shines when the market falls and acts as a safety net against big losses and erosion of capital. If you can predict the future, then go all in when the market rises, but most often we can't. This is the hard lesson which we learn the hard way. Lesson number eight. All trends in the market eventually end. Prices rise too high, supply surpasses demand, and a decline becomes common. Recognizing a fad from a genuine trend is challenging, as many fads start from real business trends. Danger arises when the prices exceed the true value businesses by a wide margin. Lesson number nine. Most trading is now controlled by the institutional investors or the big money, making up about 75% of the volume that happens on the exchanges. What these institutions do affects everyone, influencing the stock prices. Knowing their actions helps to identify overvalued and undervalued securities for potential investment opportunities. Lesson number 10. Many investors chase certainty, avoiding situations with unclear information. However, low price stocks often come with a very high uncertainty. Making decisions with imperfect knowledge can be rewarding. By the time uncertainty clears, the prices rise, and we lose a huge chunk of profits which were there on the table. Taking risks in uncertain situations can lead to good risk rewards for the investor, but always operate with a margin of safety. So that's about what we could summarize as 10 key lessons from this super book. So happy investing and enjoy the journey. Thank you.